How's it going, guys? Welcome back to another video. Today I want to show you the update of our 20 accounts that we're trading on Forex. So like I said, remember when I started the challenge? I started the challenge like a few weeks ago, and I said, hey, I'm gonna trade 10 accounts at the same time doing Forex. But what happened is I actually doubled that to 20 accounts because I want to show to you how the trading system works, and I wanted to show you that it is replicable in a way, and it is definitely something that you can apply to other accounts as well, because like I said, the system is very flexible, so it can react to many accounts and many scenarios on trading, especially because we're not using stop loss. So that's why it's very interesting for us to do it. And here is the update of the account. So as you can see, we just started trading 20 accounts. All of the 20 accounts are positives, and unfortunately I had a problem with my FX book because it wasn't really updating. I don't even know why. It's probably because of the website or something like this, but then it fixed again, so it's being updated every day. And the best account until now is account number 9, which gave me a profit of 11%. Okay, and so far all the accounts, they are healthy, they are safe, you know, they do have drawdowns, and it is the idea. Okay, we're not gonna have a low drawdown, especially over time. So the longer the time passes, the higher the drawdown. Okay, we're gonna have especially profit. So for example, if we have 30% of profit, then we're probably gonna have more drawdown because we're exposing ourselves to the market a lot longer. If we have like 50%, we're gonna have way more drawdown. If we have 70% of profit, if we have 100% of profit, which is going to happen over time, we're going to have a lot of drawdown as well. But that is something that we already know it's going to happen. The only thing is we're going to protect ourselves when that happens and try to profit more before we eventually hit the 100% of drawdown, because it's going to happen. Okay, it's going to happen over time because we're not using stop loss. So it is very complicated things. It's very complicated to talk about these things, but that's pretty much how you do when you're not using stop loss, especially because again, you're also, on top of this, you're paying swap commissions. There's also the spread and many other factors that could potentially make you get into that 100% of drawdown. But it is what it is. Okay, and so far, in worst case scenario, we have many ways to manage their risk as well. We can deposit more money, so we can open more margin, or we can, I don't know, maybe put one account and split that in, I mean, one net worth, and then, or one safety net or whatever, and then split it to many accounts, so we can kind of delay the process of that happening. So it's kind of complicated to talk about these things, but that's kind of how it is. Okay, so yeah, here's the profit. We have 890%, okay, on average per month. Okay, hey, just keep that in mind that we just started this challenge, so for now it's only been 2 months. So this is why we're probably not gonna we're not gonna see a lot of profit until now. So we're only gonna see like really 50% or 100% of profit over time, because I'm trying to do a more conservative strategy in here. Okay, so although we're not using stop loss on this basis foundation of the strategy, I still want to be conservative. So that means I'm using proportional lot sizing, or trying to do like 5% in a month, 6% in 1 month, or best case scenario 10% in 1 month. But I'm not trying to push too hard to like doing 20%, 30%, 50%, or 100% in 1 month, because I cannot stress that enough. It is possible to do that, but it's not possible to do that sustainably. Okay, and if you want to grow a capital, if you want to grow a net worth, you're not going to be able to do like 100% every month for like 5-6 years without blowing up your account. Okay, you might do it for like a little while, for a couple of months, but sooner or later reality is going to come back, and it's going to pretty much get all of your profit, and not just that, but also the money you deposited as well, which that thing happens over time, you know. So we need to find a balance in between knowing when we're going to be crazy and when we're going to be more conservative and more balanced out. Okay, so that's kind of what it is, and this is why I'm being very conservative with these accounts, because those accounts, they work as a basis account. So it's like I'm building a foundation, and we need to start from the ground up. And once we built the ground, and when we have a foundation to fall back on, then we can be crazy with other accounts. That's kind of what I'm trying to teach you guys. Okay, so these 20 accounts here, they are going to serve as a basis, a foundation for us. So this is why we're being conservative. We're trying to do like 3% in 1 month, 5% in 1 month. If we're very lucky, we're going to do like 50% in 1 year, or if we're luckier, a little more. But we have, like I said, Forex is not cash flow generate. Like, we don't generate cash flow with Forex, so you're not going to put 100% of our network in here. Okay, primarily you need to be investing in cash flow stocks or cash flow investments, you know, that are gonna have you cash flow, like I said, or blue chips companies. I mean, it's very personal. I mean, I'm not gonna tell you what you should do, but at least it's what I do for me, and it's what I see that works for most people, at least, and it's also safer. Okay, but that does not mean we cannot trade Forex, and I'm showing you that you can trade Forex. You just have to know the risks. Okay, but other than that, that's pretty much it. Okay, I just wanted to show you the updates of the accounts. This is account number 6. Account number 6 is at 2%, so it's very, very low profit. Account number 1, 5% of profit. Account number 3, 2% of profit. Account number 2, 3.64% of profit. Account number 7, 4.95%. Account number 9, 11% or 12% almost. This one's at not even 1% yet. This one's 0.65%. Account number 13, 2.55% of profit. Account number 20, 2% of profit. This one's break-even point. Account number 18, 1% of profit. So like I said, it is very, very new. That's the first month for most of these accounts. For example, account 11 to 20 is my first month. So this is why we barely have any profit. Okay, account number 1, I started in July, so that's why you can see. So 3.17 in the first month, and I started like halfway through the month. So doesn't even count that much, because really I haven't started from the first day, from day 1. August, 2.15%. Okay, as you can see, this is it. So you can see the drawdown, you can see the profit, the lot size. If I'm going crazy, if I'm like leveraging too much, or I'm pretty much opening the same trades, which as you can see, like 0.13, 0.13, 0.13. This one was a little bit bigger, but it's pretty much the same. 0.1, 0.2. 0.18, 0.9. So as you can see, there's a balance here. Okay, same thing with account number 1. Okay, so account number is the same thing. Account number 3 is the same thing, 2% of profit. Account number 2 is the same thing, 3.64% of profit. Okay, that's pretty much it. Account number 7, the same thing. Account number 13 is the same thing. Account number 20, same thing. Barely have any profit, so there's not really much that we can do here, or we see here. So just for the record, so basically the red line is the profit, and then the yellow line is your equity growth, or your drawdown. So what's gonna happen? And I already showed that multiple times, many times in this channel, is that we have a chart. Okay, and what's gonna happen is this. So we're gonna go up. Okay, so this is our profit. Actually, let me do it again. So I'm gonna do it in red, just like my FX book. So what's gonna happen is this. So we're gonna grow, okay, the accounts, but what's gonna happen is, like the longer we have drawdown, the bigger this wave is gonna grow, because that means that because we're not using stop loss, we are increasing exponentially the drawdown of the account, and all this edge right here. So basically this edge right here and this other edge, so this top and bottom, is the break point even, the blowing up of your account. So I know that it sounds insane, but like what we're doing essentially is, it's like we're putting our hands on the fire. Okay, so there's like a candle, there's a light candle, and then you're putting your hands on the fire every time you do Forex. So if you go too low, you're gonna burn your hand. Okay, your hand's gonna get burnt. But if your hand's too far away from the candle, it's also not gonna get warm. So what we're trying to do here is we're trying to find a balance in between not putting our hands too low to the point where it's gonna burn our hands, but also not too far to the point where it's cold. So we're trying to reach a balance, and we have to keep on squeezing every time. And it's pretty much the same thing with here. It's like basically this thing here is the frequency calculus. So by using proportional lot size, diversification, understanding swaps, that you're paying the spread, how many trades do you open at the same time, do you have a set or not, how many are you open 5 trades at the same time, 6 trades at the same time, do you have margin, you don't have margin, and combining all of these things without the use of stop loss, at least in the basis account. Okay, because we can use stop loss, but in other accounts, so I'm trying to separate. So like in one of the accounts, I'm not going to use stop loss like at all, and like the other accounts, I might use stop loss, and I should use stop loss because you have more liquidity. Okay, so it's right, it's kind of like trying to get the best of both worlds, you know. Yeah, trying to get the best of both worlds. Worlds, I'm not even sure if that's the correct word. Sorry if I'm wrong, but yeah. But that's pretty much it. Okay, and as you know, this is very likely to happen. So you're gonna see that most of the times, what's gonna happen is the longer the profit, the more this margin is gonna grow. So it's gonna start here, and then it's gonna start there, and then it might stay here for a little while, but then it's gonna go lower again, and it's literally the frequency calculus, and it's what's gonna happen to these accounts right here. Okay, so let me just show some account to you. Maybe account number 11, and that actually haven't happened yet, or hasn't. Yeah, hasn't happened yet. That hasn't happened yet because fortunately, all the trades that we opened during this cycle of the strategy hasn't really gave me any hard time. So for example, if I open a trade on Euro USD and I buy a trade on USD, most of the times I'm actually closing trade positive, or it goes a little bit against me, but then it goes back to break even point. So like I said, every strategy is cyclical. So in this cycle right now, in this first month, I'm actually having a easy time working because I haven't gotten to the point where I opened the trade and then the trade went so against me that it increased so much on my drawdown. So that's why you're not seeing that yet. But the longer the time passes, the more that's gonna happen. So let's say for a couple of months from now, like account number 4, account number 5, the tendency of these accounts is that the drawdown is going to grow exponentially. So even though right now it's low, you have to keep that in mind, that if you're not using stop loss, it's like every time it's like you're creating a snowball effect. Just an analogy, it's like you're creating a snowball effect of a drawdown until eventually you get to that point. And that's why I am trying to stretch as much as I can. I'm not leveraging too much on the account. And let me just show to you guys something here. This is what we're trying to do. So basically what I'm trying to do is I'm trying to get more profit before we blow up the account, or before we eventually get stuck in hedging, which in a way is sort of blowing up your account as well, because you have opportunity cost, and on top of this you're paying swap, and sometimes you don't have margin. So it is what it is, and that's why you can see most of the accounts right now, they have a solid 4%, 5% of drawdown already, because I'm only closing the positive trade, and I'm letting the negative trades go back to break-even point, or sometimes I change it. But for the most part is, like I said, the more the time passes, the more we're gonna start growing our drawdown account, or drawdown of your account, which is totally normal if we're doing this type of strategy right here. But the goal here is for us to really change, to really like use the best out of both worlds. So a little bit of not stop loss, a little bit of using stop loss, and not just that, but also using other markets as well. So we can use Forex, we can use stock market, because like I said, stock market generates you cash flow. So it's way better for you to have primarily most of your network in there, because, or investing in blue chips, not penny stocks, for example, because you know that you're gonna have dividends, you're gonna have cash flow over time, and less volatility. And then use a little bit on Forex as well, use a little bit on crypto, use a little bit even to do day trading, using quantitative methods or statistical methods, or anything that you want to use, as long as you're not doing like 100% of your portfolio into day trading, for example, unless you have $100. But like if you really have a net worth, a portfolio, you should be understanding how it works, combining that with treasury bonds, you know, and fixed income, using options as well. So literally there are many things for us to do when it comes to this investments world, and I just wanted to show it to you guys that it's totally possible for you to profit off of this. Okay, and although those are demo accounts, I do have my real accounts as well, and for the people that I trade for as well, it's just not public. Okay, but especially the accounts for other people, but the strategy is the same. So, and I even thought about, honestly guys, I even thought about opening like 10 more accounts or 30 more or 20 more accounts, and like end up trading like 40 accounts at the same time. But I don't think I'm gonna be able to handle this, because I think that's way too many accounts for me at the same time, and I also don't want to make any mistakes, so it's kind of complicated, you know. But the goal here with this strategy, again, I repeat myself again, is to show you that it is replicable, and using the right strategy. I mean, there's no such thing as the right strategy, because every strategy is cyclical, but understanding the right concepts, I would say, and the right foundations, you can pretty much do whatever you want. So like I said, there's no way that we can have something fixed in a variable market, but if you understand the concept and the basis of how to use it to work in your favor or not, so then you can do pretty much whatever you want. You can pretty much create strategies, you can do whatever you want with it, as long as you're doing the right thing, you know. And on top of this, you can combine it with not using stop loss, with using stop loss a little bit here and there, combining the markets, getting profit in here, and then throwing the profit that you had in there a little bit, and just kind of do whatever you want. And then sometimes you can have that crazy account in which you do whatever you want, and then you try to do like fucking 200% in a month or in a week or in a day, and then you try to do something crazy. But that's like very specific, so it's like you get a certain part of your profit, and then you get a little bit of that, and then you throw that and do something crazy. And then sometimes it might work, and sometimes it will work. Okay, sometimes you're gonna turn like $100 into $10,000 or $5,000 or $1,000, like you 10x your money. But sometimes you're just gonna lose everything, and actually for the most part, most of the times you probably are very likely to lose more than the times that you actually get it right, because it's just probability. But that does not mean that sometimes you're not going to get it as well. So you could literally try it once and then you get it on the first try, but that's very specific. The idea here is not to have luck in our favor. The idea here is as us to have a system that is sustainable, and then with the profit that we have sustainable, we do have another account in which we do something crazy, which is not sustainable, but sometimes it's going to work. And then when it works, you can use this money. So you transform the $100 into $1,000, then you can get this money and go to lunch, go have some lunch. You can reinvest the money or do pretty much whatever you want. And on the other hand, you have a little slower profit here, but it is sustainable, and you're building your net worth every single month and every single year, until eventually you have something to fall back on. And then you're also allocating your money into like different assets, again, assets that are generating cash flow, assets that you can fully rely on when it comes to building your retirement plan. You know, you invest on safe indexes, you invest on treasury bonds, you have liquidity, and so many other things. So that's kind of how it is. Okay, so that was the video. I'm just very thankful for you guys to be watching, if you watched to this point, and it just, I feel so happy to be teaching it for you guys, because like it took me the longest time, like 5 years, for me to actually start to understand, because I don't even consider that I know everything. I still think that I'm biggest, and I'm like the biggest student here. I'm not a professor, I'm not like the guru or anything. Like for me to be here teaching you guys something, like it took me 5 years to start to think that I know something, like just to start to think that I know like a little bit, like 1% of this market. That's how big this market is. So, and I just feel totally happy to actually be showing that, and that is totally real and possible. You just have to do it the right way, and also understanding the risks. Okay, not putting too much money or putting your life savings into something crazy and then blowing up your accounts. Now, I'm not talking about none of this shit. I'm talking about having a serious work and actually develop something sustainable to help you the same way I'm doing for me. And I'm just super happy to be showing that, and how possible it is, and that it's not a scam. You know, the stock market, the financial market, is not a scam. It is actually real. You just have to know what you're doing, and you have to understand the risks that you're facing when you trade. But that's pretty much it. So thank you so much for watching. My name is Samuel. If you do like this type of content, please let me know. hit the subscribe button. It's the subscribe button down here. And also, if you want to know more about stock market, about pretty much everything, because this channel we talk about entrepreneurship in this channel. So how to make money online, how to invest your money. I talk about content creation, which is what I'm doing right here. I'm creating content for you guys. How to build your business with YouTube, how to enhance your business with YouTube, make money with multiple strategies on the internet, pay traffic, organic traffic, and investing your money into stocks, treasury bonds, managing your portfolio so you have a passive income in your future. So pretty much everything. Okay, tutorials on how to edit the videos that you're going to create, and this channel is heavily focused on this, so it's really wide open, but it's something that is very complete. And again, I wish I had these things when I first started trading, when I joined this content creation world and how to make money with the internet world and stuff like that. So I hope you like this content. Okay, so yes, I already spoke a lot. Thank you so much. I'll see you in the next one. Bye.